The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to make sure that you're kept abreast of everything in the wonderful world of taxes because it is really complicated. Don't think because you got something mathematically correct that you've done the best thing that you can for yourself. So we want to unpeel that onion. And again, if you need any help, you want to call us 8030930, 8030930, star 930 on a cell phone, and the text line is 716-8030930. And I have Tiffany Fabian here with me. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday. It's a chilly one.
It's really cold, but tomorrow they say it's going to get up to 33 degrees.
Woohoo!
Yeah. So then
Anyway.
you will feel better.
Anyway, so we are kind of marching through. We're trying to get people to get very smart at taxes. And so something as simple as the filing status, you can't believe it, but it can save you a whole lot of money to understand what the filing status is, what the laws are, and why it's important.
That's right. Yep. I was just with a client and we usually do married joint. However, this year they had an advance for the child tax credit and they're not claiming the daughter this year because of a divorce decree. And so it was better if we did married separate.
So that they didn't have to pay it back.
So they didn't have to pay it back. And so really you have to look at the answer. And he said to me, that's why I wait so long to see you, which made me feel really good.
That's great. And I mean, that's part of what we do is that when you take a look at the stimulus, whether you got it, whether you should have gotten it, if your income was too high and you didn't get it, and you can get it now because your income is lower. If you're somebody that qualifies for the first time, maybe for the earned income credit, because you're over the age of 65 and you work, and they said before you couldn't take it, now you can, or you're a person without children and you find out that the earned income credit for you used to be just a couple $100 and now it's a lot more, or somebody that didn't work at all in 2020 and 2021 due to the COVID, and you have children and you think, why should I file? I'm not going to get anything. You're going to get the child tax credit. They're going to give you money back for that. And you can use the 2019 wages that you have to base your earned income credit on. I mean, that's just kind of unpeeling a little bit of the onion. And the other thing is, of course, we have that new New York 229 to help people get up to $350 back off of their property taxes.
Yep. Yeah, I was with the client the other day and we were doing her 2021 return and her son was there and she's like, yeah, I didn't see you last year because I didn't have to file. I didn't have any wages. And I was like, oh, no, we could have used your 2019 income for her earned income credit. So I was there, it was a little behind because I was doing 4 tax returns when I thought I was only doing 2. So somebody who thought they didn't have to file for 2020 because she had no wages, we could use her 19 for the earned income credit. Her 19 wages.
Okay, let's talk for a minute. Again, 8030930, 8030930, star 930 on yourself. I just want to start off with, what the heck is a filing status? Why should I care?
Right.
I'm asking you.
Oh, because a filing status.
I'm asking you, Tiff.
Okay, a filing status will determine what your tax liability is. It'll be what tax tables you'll use, and so it'll be the difference of what maybe the earned income credit will be, or if you get an earned income credit. So a filing status is sort of like telling you what your tax bill will be for the year.
Well, it actually steers the whole darn tax return.
It does.
For instance, if you are single, that means as of December the 31st, you were not married. What if on December the 31st, you got married?
Sure. So that means you have to do married filing separate or married filing joint, or if some oddity occurred and you didn't live with your spouse and you had kids, you could do head of household possibly.
But the whole thing is what you are as of December the 31st is what you are for the full year. A lot of times I'll talk to young people who'll say, well, we got married in August. I really think that 3/4 of the year. No, it doesn't work like that, right?
No,
So
it doesn't.
that filing status in that situation would be married filing a joint return. If you had gotten divorced on December 31st at 11:59, what's your filing status?
Then you are single.
Are single.
Yep. Unless you have children, then possibly you would be head of household.
All right. Why don't we? All right. We're going to talk about this, but we can talk about anything. I mean, that has something to do with taxes. 8030930, 8030930, star 930 on a cell phone. And we're going to go to Paul in Amherst. Hey, Paul, how can we help you?
Hi, Esther. Thanks for taking my call.
Yeah.
I heard you say some time ago that you can receive a rebate on your taxes if you pay more than 6% of your income toward your taxes.
Right.
Did you mean property in school or property taxes only? In other words, town and county?
Town, county, and school.
Oh, all combined. Okay.
So when that's the NY 229.
Okay.
Okay, and so if you're it's like there's several layers to the computation, but the first layer would be: did you pay more than 6% in combined property taxes after the star rebate in property taxes? And if you did, what is that answer? So let's say that your property taxes were $10,000 and your adjusted gross income were $50,000. So 6% of $50,000 is $3,000. Well, $3,000 from $10,000 is $7,000. Then you take 16% of the $7,000, which is a big number, but you're limited to $350, and that would be your credit on New York State.
Okay. I had one more question. I had a new high-efficiency furnace installed this past year, and as I understand it, New York State offers a tax credit for having done so.
The federal offers a tax credit
Oh,
For the energy.
for the energy credit.
It'll be $150
The
credit.
state of New York has a credit for solar power and wind power,
Oh, okay.
but the federal has the energy credit.
Even if I've paid no taxes throughout the year?
Nope, that's not going to work.
It's not a refundable credit.
Yeah.
The 229 is a refundable credit. The energy credit on the federal is not a refundable credit.
It's only if you have liability, so you wouldn't qualify if you have no liability.
Okay?
Oh, yes, okay. Thank you for answering the questions.
Hey, thanks, Paul. Thanks for calling. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. That's our text number, right?
It is.
All right, so let me give you something, like let's say you got $75,000 taxable income, just to show you how important a filing status is. And if you qualify, you can change filing status, and we'll talk about that too. But if you're single, your tax liability on $75,000 would be $12,254. If you're head of the household, that same tax, $75,000 taxable income, is taxed at $10,802. But if you're filing a joint return, that $75,000 is only $8,605. So that's a spread of well over $3,000 between single and married filing a joint return, simply because you were married. In this situation, it would be one working spouse if you were married before December the 31st. So you don't allocate time based upon filing status. What you are as of December 31st is what you are all year. Now, what if I want to be head of the household? Can I be head of the household just because I got a household?
Nope. A lot of people are under that misconception, but it doesn't work that way.
That's right. Hey, we're going to talk about that on the other side of the break. I'm Esther Gulias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. We're going to be back on the other side with your calls.
We are family. I got all my sisters with me.
Hey, I'm Esther Gulias, the tax lady from EG Tax, and we want to help you to make sure you don't overpay your taxes and get the lowest liability and the biggest refund. And there are a lot of things under them rocks, and we want to help you to figure them out. And I'm joined in studio here with Tiffany Fabian, 803-0930, 803-0930, star 930 on a cell phone. Text us at 716 803-0930, and there we have a caller who's got a lot of nerve calling, don't you think?
I think so.
I don't understand why Pat in Florida is calling, because we're freezing our what's off. Hey, Pat, how can we help you?
Thank you, Esther. It's fairly cool down here right now, so
Yeah. Like, what is it?
so not rubbing it in. Question I have is, we sold our vacation home up in near the Buffalo area this past year, and I found out at closing that New York State has a tax on people who aren't residents in the state, and they sell a vacation home in New York. Do you know the form number or whatever they have to put together? So I have.
Okay, well, first of all, it's not like New York has a tax. What they're doing is they're making sure that they withhold through the attorney what they're anticipating that the tax liability is going to be in New York State, the gain, and so that's what they're going to do. Now, when you file the IT 203, which is a non-resident tax return, you're going to report that sale as a non-resident person and come up with a tax liability, and there you have the withholding that will then offset whatever the tax liability is. So it's really just like an estimated tax payment.
And then you're going to do it on the Schedule D. And so whatever you paid for the house, plus any improvements, and then also you're going to add, the cost of real estate commission and the lawyer fees to come up with your gain or your loss, Pat.
Right. So here's the thing. You're going to report that on the Schedule D anyway, because that's a taxable event on the federal return as well, because it was a cottage, a vacation
Second
home.
home.
So you're going to come up with what you paid for it. Did you buy it or did you inherit it?
We bought it, and I've filled out the form. It went to closing. I wrote a check for the amount that I owed, less the stuff that I did to the house through the 20 years that we owned it.
Okay.
And-
All right. And you took into consideration the expensive sale?
Yes, and they wouldn't
Okay.
check at when they went to file.
So then you're going to do an IT 203, and if they over withheld, you're going to get a refund.
They didn't withhold. She sent me the check back at the amount that I gave them. So that's where I'm at. I've got all of
All right. So you mean to tell me that they didn't send it into New York State?
No, the clerk of court wouldn't touch it. They
Okay. Well, all right. Well, you still got to do an IT 203 and then be prepared to pay a tax liability if they didn't send it in as an estimate.
Now, if I have the EG Tax do my taxes for me, what do you need to do the
Well, we need that form that you and your attorney came up with. And are you now a Floridian?
I've been a Floridian for years, yeah.
So all your
Okay.
1099.
All right. So your basic income, your federal income, your Social Security, your pension, your interest and dividends, sale of stock, et cetera, and the sale of the cottage, and that's going to be on the federal return. Then you're going to do a non-resident return for New York State, and you're going to show New York State this is the gain on the property, and you're going to come up with a tax liability, and that's what you're going to pay.
And you could mail it, fax it, email it
Right.
to us, and
you
we
can
would be
you
delighted.
can do it. You can do it through virtual. You can go into our website. We have a portal that you can load everything up in, or you can just make copies and send it up. What part of Florida are you
We
from,
also have an
Pat?
office in Naples, yeah.
Tampa.
In Tampa. Okay, because we got an office in Naples. And just send it up to us, and we'll interview you over the phone and do it over the phone with you.
Okay. If I was to go ahead and send that stuff up to New York, do you need last year's tax return also?
Well, it'd be nice because this way we'll see if there was a mistake. Yeah, it would be great.
Thinking, yeah, okay. I'll do that.
All right?
Call before.
All right, thanks, Pat.
Thank you very much.
Enjoy the sun.
Thank you very much.
Hey, it's sunny here, right?
Yeah.
It is.
Chilly but sunny.
It is.
All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, we got a text here, Tiff.
Yep, it says, Esther, all my tax papers are ready. Is there any reason to wait to see my tax preparer, or should I just go ahead now? Thank you.
There's no reason why you shouldn't file early if you have all the information. Now, just today and yesterday, I think I had a run on people who had unemployment who didn't know that they were supposed to download those forms
Right,
and
the
didn't
1099G.
remember their username and password, so it was impossible to go into the site to get their unemployment. So if you don't have all your correct records, then I would not file my return.
Right, right.
But if you have all your correct records, go ahead and file. Absolutely.
yep.
But listen to me, if you got unemployment, you have to go get that form yourself from the New York State Department of Labor website, a 1099-G form. They don't send it to you. And don't think because they didn't send it to you that they forgot, because believe me, they didn't forget.
And I've noticed the IRS is a little bit more sophisticated now. I just did a return, and we sent it for somebody, and she didn't have her 1095A from the marketplace, and so it was rejected. And the IRS said, "Oh, she needs to marry it up with the 1095A." Whereas in the past,
Okay,
they
but
would just do
let's tell everybody what that means, because the question is, should I get my stuff in early?
Right.
Who has the 1095A, and when is it important for them to report it?
Sure. So a 1095A means that you got health insurance through the New York State marketplace or whatever state you live in. And so that means that you might have a subsidy or you might have to pay something back. And so you have to reconcile it on an 8962. And so again, to reiterate, the 1095A is if you got health care through the marketplace. And so it's your payment that you made, and so you have to see if you made too much of a payment or not enough, and so it's reconciled on your tax return.
So if, let's say that you were somebody that needed health insurance, and so you went to the New York State Department of Health,
Right.
for your insurance. Many people got subsidies. In other words, the state of New York helped pay your health insurance. If that's the case, you get a Form 1095A. If you don't put it on your tax return, they're going to reject your tax return because they know that you have that coming. So that's somebody else that wants to make sure they have that form so that it doesn't hold up the refund. I will tell you, I have seen people in the last couple days that have been waiting and waiting
Right.
for, especially people that had the $10,200 subtraction for unemployment last year, who had a balance due, and they paid the balance due that was corrected, but the IRS has never matched up the payment that they made with the amended return.
Correct.
And that's a problem too.
Yep, it sure is. And those people who got the rebate from their unemployment, they'll also get a 1099 INT from the IRS this year because they paid them a little bit of interest.
Because because it took forever to
Right.
get the money
So
back.
people are a little bit confused.
Okay, let's go back to the phones. I'm Esther Golias, the tax lady. Line 1, we got Rhoda. Rhoda. Hey, Rhoda.
Hi. I just have a couple questions. My husband died January 5th,
Oh, I'm sorry to hear that.
2021, of COVID, and we always filed joint return, and I didn't know, he only lived like 5 days in this
Right.
year, but do I still file as joint return for this year?
That goes right into what we're talking about. If you were married as of December 31st, you're married throughout the year. By the same token, if you had a spouse that was only, or a child for that matter, that was only alive any part of the year, one day, you would still file a joint return this final year.
Okay.
So yes, you're going to do married filing joint.
Okay. Thank you.
All right, right.
so
I'm
sorry.
sorry to hear. Yep.
One other question. 2 days after I mailed my 2020 tax return, I heard you on the radio saying, "Don't mail your tax returns." I'm waiting to hear from.
I know. Well, if you want, Rhoda, you can come into one of our offices and we'll electronically do the return. Those paper returns, and I know nobody believes me, but you would know by the evidence because they're not processing them. Those paper returns go to the bottom of the pile. They do not want you to do it. And I use the word it's illegal. It is illegal. They fine us if we do a tax return by paper that hasn't been rejected as an electronic return. There are some returns that have to go paper because of rejects, but that's about it. But if you want us to come on into one of our offices. We'll input that return. You'll be done and it'll be over. But this year, file jointly. It'll be your final return.
Yeah, so like Esther said, to reiterate, 2020 e-filing is also open. If you wanted to, Rhoda, you can also call me at 632-7886, and we could do a conference call to the practitioner line to check on the status, so I would be willing to do that as well.
Okay, Rhoda?
I've called. I sent it in February, and I called every month after that. I heard nothing from March and
I'm going to tell you, they don't have the personnel to do paper returns.
Yeah,
So you do what you want. I'd get it inputted.
I
and get
called
it
and
done.
checked with somebody about 5 days ago, and the IRS agent was so wonderful. She was so very, very nice. She said, "I don't even see it in the system yet," she said.
Yep.
And so it,
You
it
really
goes
don't
back
even
to
know
what
if it
Esther's
went
saying.
to Timbuktu.
June.
She
So-
said, I just don't even see it yet, she said.
Okay, Rhoda, I'm so sorry to hear about your loss.
Thank you.
All right, thank you, dear. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We have callers on hold. We're going to be back on the other side of the news with your calls. Until then, I'm Esther Gulius, the tax lady.
We are family. I got all my sisters with
Hey, everybody, I'm Esther Gulius, the tax lady, and we want to help you with your taxes because we don't want you to overpay, and we want you to get some, like that commercial, $27,000. I had a client today say to me, "I'm here for my $27,000. I said, "Buddy, you're 80. I think we need some children. You got to
I
have
know.
some children."
People are like, there are lots of tax changes. The couple I was just with, and I go, the biggest ones are for people who have kids.
Children, absolutely. All right, let's go to the phones, and we're going to go to Mike in Wheatfield. Hi, Mike.
Hi. When's the last date the banks have to send out their interest information?
Well, January 31st was the due date.
And today we're at
And so all you
February
can
5th.
do is say, "Doggone it, why didn't they send it out?" Many of them are looking at everything electronically. Did you look online to see if they haven't posted it to your email?
No, because my wife called the person she usually contacts there. She's a money market, and they said, "Well, it'll be next week."
Yeah, well, it's coming.
Yeah.
So it's Christmas, but it is coming.
If it's a brokerage, a lot of them ask the IRS for extensions of
extension,
times,
right.
And so they're very able to do that. So they'll ask for a time extension, and they're usually granted.
But the banks are pretty good with the 31st. You'll get it next week.
Oh, the money market's not different, right? Just because it's a money.
No, it should be the same.
Okay, thank you.
Thanks, Mike. Probably got, 0.5%, I'll tell you. Okay, let's go. We got this text.
Yep, it says, "Hi, Esther. What is the property credit you mentioned in the past couple of weeks? Something to do with a formula for property tax minus star. Thank you."
All right, so
that's
it's the New
IP.
York 229.
Yep.
And basically, it's a credit for people that are paying large property taxes, which we all are, but they exceed 6% of your adjusted gross income on New York State. So very simply, let's say your adjusted gross income were $50,000. 6% of that is $3,000. If your property taxes are $4,000, then you're over. You've met that threshold. You're over by 1,000. You then multiply the 1,000 by 16%. 16% of 1,000 is $160. The minimum credit has to be at least $250 to get anything, and it's $250 to $350. So every property is going to be different. You have to do the math yourself. But it's IT 229.
I have found
New
a lot
York.
of filers that haven't had to file for many, many years are qualifying for it because
It's a wonderful
yeah,
thing.
their property taxes are high and they don't make a lot of money. So
Right.
they're qualifying for the New York IT 229,
And
which
then-
is really exciting.
Oh, let's go back. And 8030930, 8030930. Star 930 on a cell phone. Let's go to Tony. Hey, Tony.
Hello.
Hello. Hey, Tony. How are you, sir?
Good. My question is, how much can a dependent make before you can no longer claim them as a dependent?
Well, it all depends. I mean, because unfortunately, that's how the tax law goes. It all depends. Let me ask you a couple of questions. How old is your dependent?
26.
Okay. All right. So that's very important because it starts to get tricky once the dependent is the person that you want to claim is over the age of 24. Because up to the age of 24, if your kid is in college, then they're very lenient with the money that they can make as long as you're furnishing over 50% of their total support. If your child is is 24 or older, okay, and makes more than $4,400, then you cannot
42.
claim them.
I thought it was 4,200.
Yeah, that's gross.
That would be their their gross income. Yes.
Okay. Well, that
Okay.
is
So
a question.
Now, is your son in school or daughter or?
No, but the only thing he had income from in 2021 was from taking care of his mother through that, free
the way
or whatever.
does he live with the mom in the same house?
No, he lives
Okay,
with.
because if he did, he wouldn't have to pay taxes on it if you reside in the same
but
house.
there's that program where
Consumer Direct or
Right.
something like that, which is a wonderful thing. So who better to have take care of you than your family member, right?
Right, but it was minimal amount of money, but it was over 4,400 barely.
well, that's it.
You can't
I mean,
claim them.
he had no other source of income.
None.
But the nice thing
Okay,
is,
but
he's gonna
but you
qualify
want to
for
know what
earned
he's going to
income.
get? He's going to get an earned income credit.
Yeah.
Oh yeah.
Yeah.
Yes.
So there's one of the things that changed this year is so he can't be claimed as a dependent. And first of all, let's just talk turkey here. If you could claim him, he would save you $500. Okay.
All right.
Unless he lives with you, Tony?
Yeah.
Are you single or married?
Single.
Okay. Well, the beautiful thing for you would have been
The head
that
of
you could have been
household.
head of household.
Right.
But here's for your son though, he would qualify for the earned income credit, and he would get. So you're only going to save the $500 except for the head of the household thing, which is kind of bad. For him, for the 4,400, I'm looking here for
Yeah.
his earned income credit is going to be over $700.
Okay. Well,
So he wants to file.
And then did you get all the stimulus money for him when you did claim him those other years?
he did not get it. He only got it for the last one.
That's the 1,400.
So then you would want to,
Well, he got the 1,400.
yeah, but he said he didn't get the 600 and the 1,200.
Yeah, if he didn't get the 6 and 12, he can file returns for that.
Yeah, I think he only got the last payment. What was the last?
Well, have him give us a call, and we'll try to help him out. But he does
Oh,
qualify for
really?
the earned income credit, and that's where a lot of people don't realize that that's a major change.
Okay. So there's
Okay.
to file for the stimulus on the
taxes this
You
year?
can still file for the stimulus if you didn't get the 1,400, but if you got it, you can't get it again.
And then the 600 and 1,200, really, you should have gotten it if you claimed him as a dependent. You should have gotten $1,100 for him. You should have gotten the 600 and the 500 for the one that was 1,200. So you should have received $1,100 for him in your
if
checking.
he was a dependent.
If he, I think it sounds like he was a dependent.
Was he always your dependent?
Oh, yeah, for 15 years.
Yeah, so you should have gotten $1,100 in stimulus money for him. The first
Before.
stimulus was 600, and then dependents got $500 for the second. So obviously that's a total of $1,100.
Died as a dependent then because he was too old.
Well, no. You see, if they're over the age of
20.
over the age of 23, then their income is limited. So if he had no income, you could have claimed him all those years. Then you could have been head of the household. So was he working any of those other years, Tony?
What I'm talking about is for the stimulus. that
Okay, well,
I was able to collect that because he was over the age of 24. I couldn't claim him as a dependent to get the stimulus.
but you could have claimed him as a dependent if his income was under $4,000.
Okay.
So and you could have filed head of the household.
So-
And so you got 3 years to amend those returns.
20,
So
19,
if I were
and
you, I'd
18.
look into it.
Okay. So,
Okay, thanks, Tony.
all right, thank you.
All
You-
right, I'm
you-
Esther Gullius, the tax lady from EG Tax. I know it sounds complicated.
Yeah,
but
and then I
it
just
all
wanted
becomes
to
nuts. You
tell
know?
Tony to call me at 632-7886, and I could help you sort it through a little bit better. Again,
Okay, let's go back to our text here.
632-7886.
What do we got?
It says, I have no New York State tax liability this year. Can I still receive the New York State property tax relief credit? Great show. Thank you
Yes.
for your help.
Yes. Yes.
It's great.
You can get it. It's a refundable credit. So
Yep.
it's a wonderful thing. That's what's so wonderful is this is helping out seniors that, or even people that have just high taxes and don't have a lot of income compared to what they're paying in taxes. So it's a good thing. And then what else we got? Hi, Esther.
Yep,
What
that
is it?
was-
Oh, I already did that.
Yeah.
Okay, why don't we go to Greta? Hi, Greta.
Esther, first of all, I've been using your tax service for a couple years now, and I love it. And I just
Thank
wanted
you.
to put some information out there for those on unemployment. And I mean, I did my unemployment on the telephone. So what I did is to get my tax form, I just made a special request by using the telephone. It's a computer that's asked you if you want your 1099-G. But I'm not sure if you can do that special request for those who did it online. But I just wanted to put that out there. I have the
You know, Greta, and I really appreciate you clarifying that, and it's very true. I was talking to a taxpayer this morning who had forgotten their username and password, and you can't use it on the phone. Once you went electronic, you can't use it on the phone. So it's such a frustrating thing.
Yeah, I heard that once you do things online, you got to stay online. But with
Right.
on the,
More than anything, people that are using New York State unemployment, make sure you remember your username and password. They will let you change it, but it's like painful. And like what Greta did, she just did it on the phone, but that's how she collected her unemployment every week by the phone, right, Greta?
yes.
Yeah.
Yeah.
So thank you for that clarification. Appreciate it.
And then something important about this year when you do unemployment, regrettably, they're not going to let you forgive 10,200 of it on the federal, whereas they did last year. But it should be good.
That's right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I will
Yeah,
tell
and-
you, a lot of people, like during the snowstorm we had the other day, people called up and said, we don't want to come out. We said, well, we'll just do your tax return over the internet then.
Yeah.
So we had them uploaded to our portal, or we had them take a picture and send it over the email, and we did the tax returns electronically, virtually.
Yeah. One thing going back to the unemployment, I've been noticing because they've got 10,200 forgiven last year, and a lot of people had withholdings on that. A lot of people are a little short this year because they didn't get the unemployment withheld deducted the 10-2, and they didn't have the benefit of the withholding. So it was just a wonderful thing that they did last year.
Well, and the other thing is, don't forget when talking about doing your tax return. If last year you did that emergency kind of distribution
89-15.
from a pension plan or an IRA, and you made the election to spread it out over 3 years, don't forget this is year 2.
Yep, you have to do that on the 89-15.
This is year 2. Hey, I'm Esther Golias, the tax lady. We're going to take a short break. We'll be back on the other side with your calls.
We are family. I got all my sisters with me.
It's nice in business that somebody would care about you. Because sometimes it doesn't feel like people care about you, But I will tell you, we care about you. Now, are we perfect? We're not, because we're human beings. But I'll tell you, we care about you.
I know when I called Rite Aid the other day, there was a message that came in. Hello, this is Jim Smith, president of Rite Aid. I just want to warn you, because of the national work shortage, you may experience longer than necessary delays. It's just
we
sad.
can say that too.
Yeah, it's been a tough year.
It has been a tough year, I will tell you. Not our tax specialists. Our tax specialists are great, but our support staff, we hired that answer the phone and greet the people, and
We've been
and all
asking
that kind of stuff,
friends,
and
family.
and, oh my gosh, we gain 10 and lose 5, then gain 5 and lose 3, and
Right,
oh gosh.
right.
So we apologize if when you call our offices you find that everybody's going EG tax. Anyway. All right, let's go back to the phones. What do we got here?
We've got, are you on the text
No,
or the
we'll
phone?
do the text.
Okay, when I received my refund due to the 10,200 unemployment adjustment, I also received what is called the recovery rebate credit. Is that the stimulus? Thanks, Alan.
Yeah, it's the stimulus. The recovery rebate last year was for the 6 and 12. The recovery rebate this year is for the 1,400.
Right.
Okay, so if you didn't get it, like if there was, I had a lovely couple come in the other day with twin babies that they got last year, and nobody got the stimulus for them, so they got $2,800 extra on top of the $3,600. So they got the $3,636 and $2,800.
Yeah,
They were very happy people, and they came out in the snowstorm.
Yeah, I had
And when they left, they said that they would have come in a dog sled.
I had a client yesterday who she said, Tiffany, I got this check in the mail for $277. I have no idea what it was from the IRS. And so we called the IRS to find out, and I had amended her 19 return because
they
of
finally
energy
processed
credit.
it?
And they finally processed it, and they mailed her some interest too.
Okay, the other thing I want to talk about, and one of the things that people aren't aware of is that daycare credits are now 50% up to $16,000, 50% of $16,000 for more than two kids or more, which means the credit could be $8,000 refundable. Now, I have had clients in my office, and I say, who's watching your newborn? Oh, nobody. Okay, well, it must be quite a newborn. Is grandma watching the newborn? Yes. Are you paying grandma? Well, we don't want to say. Well, we pay her $100 a week. That's $5,200. If grandma claims the money and takes the expenses for having the child in the home, which they can do legally, they can write off part of their home office, utilities, insurance, property taxes, mortgage interest, repairs, the food for the kids, the toys, the travel. Grandma then will have to pay very little taxes, and really the taxpayer, I suggested, should pay the taxes for the grandma, maybe $1,000. The kids, though, get $3,000 when you factor in the state. So you got them paying $5,200 to grandma. Grandma's going to pay $1,000 in taxes, but they walk away with $3,000. So even by paying grandma's tax bill, they come out $2,000 ahead. That's a lot of money.
Yeah, and then that grandma is paying into Social Security, which is always a good thing.
Right.
Sometimes.
Okay, what else we got up here?
How is the New York 229 affected by the STAR program?
It's after the STAR. The amount that you're using for the basis for whether you exceed the 6% is after the STAR.
So you're going to subtract that figure
Right.
off of how much your property taxes are and then adjust for the New York 2229.
All right, so what
229.
else we got here?
Thank you very much, Esther, for your service. Does the 1099-R show qualified charitable distribution, tax
Well,
distribution?
it would be if you did a qualified charitable distribution.
Yep,
There
and-
are many people when having to do their RMD, the required minimum distribution, they've done a direct rollover from the IRA to the charity. And if the 1099-R is done correctly, it'll have a Q in the box.
In box 7.
Right.
That's right.
Okay. All right,
So
let's
it
go to
would.
Liam. Hey, Liam.
Hey, good afternoon.
What a great name. Hey,
Hi,
Liam.
how can we help you?
I retired last year, and I should be getting profit sharing in a few weeks. Is that considered earned income for this year?
It's taxable income.
It's
potentially.
taxable for sure. I don't know how they're going to handle it. It depends. I think it is something that will be reported on your W-2. I think what you need to do is it's so hard. It could have been profit sharing where they let you buy the stock and you sold the stock and they gross up the amount that they contributed on your W-2, but the sale of the stock is on the D. It all depends on how they're handling it. I hate to backpedal that way, but I would suggest you call HR and ask them how they're going to
And then,
handle it.
Liam, you started to say, well,
In the past, I had just contributed it to my 401, and it's through General Motors. And if it was going to be considered earned income for this year, I was just going to put it into a Roth. But it has to be considered earned income, I believe.
It has to be earned income in order to do that. Right. Right. I really, without seeing the way they're going to handle it, I don't know. I would think that it would be, but I'm not sure. It all depends on how they're giving you the distribution.
Well,
and the thing is, do you have a big pension plan from GM?
well, big compared to who? I mean,
Well, I mean, give me an idea. Are you single or married?
I'm single. And
May I ask
be like
approximately
on.
what you think that you have as far as pension monies?
As a monthly,
No, total for your total dollar value.
well, last year it was 15,000 because it was a partial year, but it's like $30,000 a year.
Okay, so that's what you're going to be getting?
Yes.
so he must have had wages
Okay,
too.
and that's not including your Social Security, right?
Yeah, I'm too young for that.
Okay, so if you're getting 30,000, I can see why you might want to move your money into a Roth. But I think a lot of people use a Roth that shouldn't use a Roth because they don't have large savings accounts, IRAs and 401ks, and so the standard deduction right now for married filing a joint return is 25.1. It's moving up every year. So let's say in 5 years that might be 30,000. That would mean you could take almost $30,000 out a year tax free. So if you gave up the benefit right now for taking the deduction, and let's say right now you're in the 25% bracket or 30% bracket, and it's $5,000, you're giving up $1,500 in tax savings that you may never, ever, ever get back because the standard deduction is so high. So that's something that I like to work with people on, because just because it's tax-free doesn't mean that it wouldn't be tax-free another way. Because
Liam,
if they
Esther-
are subtracting using the standard deduction, the income that would be taxable that ends up not being taxable, you've just shot yourself in the foot
Liam
by
is
using a
asking,
Roth.
why wouldn't you put in a traditional IRA versus a Roth?
Yeah, right. So something to think about.
Okay, very good.
Okay, thanks, Liam.
Bye-bye.
I'm Esther Golias, the tax
Bye,
lady from
thank you for the
EG
call.
Tax. What?
I said it sounds like he knows what he's doing.
Right. Well,
Yeah,
I'm
and
not
you-
saying
and-
that he doesn't.
I know.
But I mean, I'm talking to the broad marketplace.
Absolutely.
A lot of people, you get a stockbroker that
Absolutely.
says, "Oh, this is never going to be taxable." Well, great, it's never going to be taxable, but it wouldn't be taxable anyway. It starts off being taxable, but then after you take the subtraction off for the state of New York and you take off the subtraction for the federal, you're not going to pay taxes
Yeah.
on it anyway. So you're giving up tax benefits of hundreds of thousands of dollars over your life, and you're never going to pay taxes on it anyway.
For instance, the new standard deduction is so large. There's so many people that have room to take money out of their IRAs and they wouldn't even pay tax on. And so that's sort of what you're alluding to.
Absolutely.
Yeah.
Okay, so If you're a mommy or a daddy that's doing daycare, you want to get the daycare provider's social security number. It's 50% of what you give them. If grandma and grandpa are listening and you're doing daycare and the kids are giving you money, make sure that you report it so that they get the credit. It's so much money. So you think about it, $3,600 for kids under the age of 6, $3,000 for kids under the age of 18. There's the education credit that's up to $2,500 on the federal and like almost $400 on the state. There's a daycare credit, could be up to $8,000. There's the recovery rebate, could be $1,400 a person. There's a lot of money, and you want to make sure that you don't miss it.
And then as we started off the show, we're talking about filing status. I really encourage somebody, if they're married filing joint, to look at married filing separate. Maybe it would be an option for you guys. And also,
And
if you have
it's so
questions
remarkable
about filing
because
status, let us know.
our tax software has this ability to take your joint return and with a
click
the touch of the button, we can split it up right away. So it's a great opportunity to let people know the best way to file. Well, during the week, if you need the best tax help, EG Tax is there. We have 31 area offices to serve you. We apologize if we're busy this next few weeks. This is like a lot of people wanting to get their money in. You got to understand that. But you can call our offices for tax help. You can go to our website at egtax.com, ask the tax lady. And we hope that you've learned something here today.
Absolutely. And stay warm and have a great week. And we're marching on to February. More of February.
Right.
Yeah.
All right. So until next week, I'm Esther Gulius, the tax lady from EG Tax. Come visit us online. Come visit us at the offices. We love you. We thank you for listening. Bye-bye.